Time to talk about my favorite fintech company, Square. Disclosure here, I do invest in Square. No recommendations at all. Hello everyone, welcome back to the channel. Today we will talk about everything about Square, their earnings, Afterpay Acquisition, the goods and the bads. If you are new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Also, I have a completely free Discord group chat, which the link for that is down in the description below. Square reported earnings weeks ago and they reported a nice growth. They reported total revenue of $4.68 billion, which obviously looks incredible as it went all the way up from $1.9 billion, which is a 143% growth year over year. I know that they have a huge amount of revenue coming from Bitcoin, which is about $2.7 billion, but still without that, we can see that their core business is growing at a very nice pace as well. Their transaction-based revenue grew 80%, their subscription almost doubled, 97% growth, and their hardware revenue 126% year over year. So without their Bitcoin revenue, they still had nice growth. Now, their cost has always been great except for two sectors. The transaction-based and subscription business are incredible. Look at this. They spent $123 million to generate almost $700 million. That looks incredible, but we can see that their hardware costs are way higher than their revenue, and their Bitcoin has a very small gross margin. Still, overall, the company has a kind of a nice gross margin of 24%. Okay, it's not definitely the best one, but from their core business without their Bitcoin business or Bitcoin revenue would have a gross profit of about 50%, which is obviously way better than 24%. So basically, the Bitcoin side is making the revenue growth a little more impressive, but the costs are huge. Still, their core business growth is incredible itself. Even though their expenses increased year over year, their operating income is accelerating as they reported an operating loss last year and for the first 6 months of 2020, but this quarter they reported an operating income of $124 million. And because of that, they reported a net income of $203 million for quarter 2, being their fourth profitable quarter, converting Square into a fully complete profitable company. Now, all that looks great. Excellent growth, nice gross margin that needs to be a little bit improved because of Bitcoin, but something that people are worried about is their outstanding shares. They are diluting the investors. They diluted their shares by 3%, which is not as huge as other companies, but still the thing that people are worrying about is their Afterpay acquisition. First of all, Afterpay is a company that offers buy now and pay later services, just like PayPal or a most famous one, Affirm. Square announced plans to acquire Afterpay, strengthening and enabling further integration between its sellers and Cash App ecosystem. The transaction has an implied value of approximately $29 billion based on closing price of Square common stock on July 30th and is expected to be paid in all stock. Afterpay shareholders will receive a fixed exchange ratio of 0.375 shares of Square Class A common stock, meaning that basically Square will have a huge dilution in order to acquire Afterpay. Not only that, people are scared that Square might be overpaying to buy this company called Afterpay. I do believe this is a good market for Square to get into and a good combination, but we do have to accept that it's going to be a huge dilution. Square will issue over 20% more shares in the coming months for this deal, and no matter how well they sell it to us, as it is a huge addition to the platform and future growth for Square, it is still a huge dilution. I do believe Square getting into this business is going to be great for their growth and expansion, but we gotta wait and see if Afterpay was the best company for them to acquire to enter into this business. Now, their balance sheet is pretty healthy. Tons of cash and cash equivalents of $4.5 billion and $13.8 billion in total assets. Total liabilities of $11 billion, which increased a lot as their debt increased, but still, they have a nice balance sheet. nothing to worry about right now. On their cash flow statement, we do see again a lot of money on share-based compensation, all the way up from $174 million last year, as they compensate their employees with stocks, and that is something to keep in mind for the future of this company. Now, in this operating segment, we can see that the Cash App is growing a lot as well. Their transaction base was $110 million last quarter, all the way up from $53 million a year ago, just like their subscription, all the way up to almost $500 million from $271 million year over year. Obviously, one of the fastest growing business, but their sellers do not fall behind. The sellers segment was all the way up in the segment revenue to $1.3 billion from $723 million. I do have to say that it is a nice growth that is supposed to get way better with their Afterpay acquisition, which obviously is incredible because this company is doubling very fast. Now, Square is currently trading at $268.7 per share with a market cap of $123.3 billion and a massive PE ratio of 242. It does have a nice price to sales ratio for such a growth company, to be honest. Comparing it with PayPal, which is trading at $278 per share with a market cap of $326 billion and a PE ratio of 67.88, way better than Square, but a higher price to sales ratio of 13.80. The thing is that Square is growing at a very accelerated pace, while PayPal, even though it is a huge and excellent company, reported a revenue growth of 17% year over year for the second quarter of 2021, and that is the biggest difference between them, in my opinion. We all know that Square Sellers ecosystem and Cash App is providing the most growth, which is about 1/10 of what PayPal did, meaning that Square still have a lot of room to grow. Now, I started investing in this company a long time ago. Right now, I'm up 74.53% in my position, since I have an average cost of 153.95%. You can see that it only represents 2.91% of my portfolio. I started investing in this company back in 2019 when it was at $77.39 per share. I bought again at 72, at 64 because it dropped a lot, at $64 per share. And then, as you can see here, that was in August 2019. But a year later, in June 2020, I was already buying this stock at $102 per share. So let me tell you something. With this, I do want to mention that you guys know I invest long term, and this is exactly why. I never expect a stock to double or to give me a huge return in the short term, because I know it's impossible for me to time the market and to know if the stock will go up in the next year or not. Obviously, when I started investing at $77 per share and dropped until $64 per share, I was buying more, but obviously it's not good to see your investments going down. But this is why I like to tell you guys that I invest long term, because even though it dropped from $77 to $64 per share, a year later I was already buying this stock at a higher price than when I started in 2019 at $102 per share, and I then bought again at $140, at $164, at $183 per share, and the last one $166 per share. That was in October of 2020. Now, this is why I always tell you guys that I invest long term. I do understand that this stock does not represent a huge amount in my position, in my portfolio, as it is only 2.91% of my portfolio. Obviously, I regret not adding more at that moment, but I couldn't know what was going to happen. And still, I was feeling comfortable at the moment with that position size, but now I want to increase this position to 5%. But still, I'm not buying at these levels. I do want to increase my position to get it to 5% of my portfolio, but I'm not buying at this current levels, at least not as much as I used to. I do want to see how they do with Afterpay, even though that is going to happen next year. But if I were to add to my Square position this year, it is not going to be a huge amount of money in comparison to what I invested last year and 2019. I'm not recommending anyone to invest in this stock or sell this stock. I invest in it because I love the industry, I love the innovation, and how they are doing as a company. I know some prefer PayPal or any other fintech companies, but I have always been a Square fan or a fan of Square. Obviously, as long as their fundamentals keep improving and the company continues growing as they have done this past year. Hope you enjoyed the video. Please smash that like button and subscribe since it really helps you out. Thank you and see you next time.